Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined by Nicole Dines and Paul Strome. And noticed in the US over the last few days, JP Morgan calling managing directors back to the office full time, so even on Fridays. So interesting just to see some trends there happening in the US that may come over here into Europe. Paul, what have you been tracking?
Well, in a further sign that there's still plenty of capital targeting real estate, Blackstone has announced the final close of its latest global real estate fund, and what it says is the largest real estate or private equity drawdown fund ever raised. The fund, which is Blackstone Real Estate Partners 10, has raised 30.4 billion of capital commitments, which brings the capital raised by its three opportunistic strategies, Global, Asia and Europe, to 50 billion. Blackstone said that in anticipation of changing macro trends, it shifted its portfolio away from asset types facing headwinds, which includes traditional offices and malls, and now about 80% of its portfolio is in logistics, housing for rent, hospitality, lab office and data center assets. Global co-head of Blackstone Real Estate, Kathleen McCarthy, said the record-setting fundraise also reflects the trust the firm has built with its limited partners. Meanwhile, in Paris, luxury retail brands owner Kering Group is paying more than 600 million euros for an 8,000 square metre mixed-use development in central Paris, close to Place Vendôme in the city's first arrondissement. It's bought the project from investment and asset management subsidiary of La Compagnie Financière de Choisir. On completion, Kering Group's Gucci brand will occupy 80% of the space. The off-market transaction is a forward funding type deal, and the building at 1214 Rue de Castiglione will now be renovated over the next 30 months, with completion in the first quarter of 2025. Lastly, demand for industrial and logistics real estate space in CEE markets will outperform Western and Southern Europe, according to new research from logistics and industrial developer investor CTP, which has highlighted 5 factors that are driving growth in the sector. First, it identifies the competitive rates for skilled workforces in CEE, which in the logistics sector averages less than a third of those in Western Europe. There's also a reverse brain drain underway, increasing the pool of skilled labour. Then there's significant infrastructure improvements, which will ensure efficient flow of goods in the region and support the rise of nearshoring and friendshoring, which is underway. Third is the CEE's economic resilience. Fourth is domestic consumption, which has risen by almost 50% since 2010. Lastly, strong property fundamentals such as net absorption rates that have outperformed Western and Southern European countries. CTP itself plans to double its own size by 2030 to respond to the expected increase in demand. And the company's CEO, Raymond Vos, said CTP is perfectly placed to meet this demand because it's a significant land bank across the region that'll enable it to double its gross lettable area by the end of the decade. CTP is active in Czech Republic, Slovakia, Romania, Hungary, Poland, Serbia and Bulgaria, as well as Germany, Austria and the Netherlands. It's already got a portfolio of 10.5 million square metres. The development land bank is 20 million square meters.
Yeah, it's interesting to see. I think there's still that large focus around logistics and portfolios being built there and opportunities in that sector. I also noticed, interestingly, in the sort of crossover with real assets and infrastructure, that AXA IM Alts agreed the sale of Data4, which is one of Europe's largest data center platforms, to a Brookfield Infrastructure. So also interesting to see, some potentially big deals in that area coming through as well. Nicole, what have you been tracking?
Lots of decarbonisation news, which is what we like to hear. LaSalle Investment Management, for example, announced their debt investment division has expanded its senior secured debt strategies to include a dedicated sustainable lending focus. They said they've seen an increased drive towards net zero carbon. It keeps accelerating, so they decided to add this sort of green loan focus to provide a crucial source of capital, they said, to help reduce the carbon footprint of European real estate. And in the last year, just to give an idea of the demand out there, in the last year, LaSalle's platform has provided over 350 million euros of green loans. Things in this field are happening everywhere, including sort of smaller countries like Montenegro, which is in the last few days, Chaiton Capital Capital, which is a London-based private equity company, has signed a memorandum of understanding with the government of Montenegro and the country's national power company. It's a 700 million euros ESG-compliant infrastructure development project, which is going to reduce the carbon footprint of the country and modernize the energy infrastructure. So very significant. It's also the largest ever foreign investment into the country. So it's really quite a significant development for the country. And Azora, the Spanish company, has acquired a strategic minority stake in Abatable, which is a London-based carbon procurement and market intelligence technology company that sort of helps businesses connect with carbon project developers to offset their carbon emissions. So Azora, it's a sort of a win-win situation for Azora and Abatable, because Azora is obviously committing to decarbonization and sort of burnishing its green credentials. But its investment will also allow Abatable, sort of fairly small company, to buy Ecosphere Plus, which is a carbon credits procurement platform. So the combination of the three will create the largest tech-enabled carbon procurement platform in the world, which will be able to support thousands of companies to achieve their net zero plans. So that's a good sort of good news story all around. And on a more sort of social impact side, in the UK, Fiera Real Estate has announced a new strategic partnership with Simplify, which is an affordable housing specialist. So what they're going to do, they're going to provide initially £30 million with an idea to obviously more in the future to acquire a portfolio of affordable homes across the UK, which would then be let on 20-year plus index-linked leases to local authorities. And they said they're doing this because the situation is critical in the UK, undersupply of homes in general, but affordable homes in particular. There are 1.2 million households in the UK that are waiting for affordable housing, and 100,000 households which are in temporary accommodation, which means they do not live in good conditions, and it's also very expensive for local authorities to house them. So that's another good news story. And from the research side, Savills had a really interesting bit of research. As we all know, commercial real estate, like everybody else, has had a very negative impact from the energy crisis. But Savills has looked at different sectors and how they've been affected in very different ways. For example, office and logistics have been the most shielded from the energy crisis, because energy costs account for a very small share of the total business spending. Just to give an idea, there is between 2 and 4% of total expenses. For example, in the offices sector, staffing accounts for over 50%, while transport and labor account for over 75% in logistics. So even if energy bills were to double overnight, they will still account for less than 10% of total costs in these two sectors. While obviously, as you'd expect, retailers consume large amounts of energy, which they find it very difficult, especially at the moment, to pass on to consumers. So they're being badly affected. And data centers, again, as you can imagine, and life sciences industry are huge consumers of energy. So what Savills suggests is that for data centers, they should really try to rely ever more on greener sources of energy, while retailers can turn to pretty simple but effective measures like closing doors and lowering temperatures in shops to reduce the increasing costs they've had to put up with recently.
Yeah, a lot of focus, Nicole, I think, around sustainability all week. And that was included as well in the interviews we've had. So video interview with Sebastian Croitel of PwC, really pointing out that clarification is still needed to make EU taxonomy a reality. A lot of people trying to work in this area, but not necessarily the clarity that they actually need in order to put everything into practice. And certainly we at Real Asset Impact will be trying to push that agenda forward in terms of the EU Commission. Thank you, Nicole. Thank you, Paul. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the real asset markets.